Let's take a look, and particularly also given what's going on in the US with its latest data as well. Nick Twyedale joining us from FP Markets. Nick, very good to catch up with you.
Thanks for having me.
Let's start with Japan then, because we just had those latest inflation numbers out. I'm just looking, in fact, at the yen at the moment. Actually, not a lot of movement.
No, it's been pretty moribund, hasn't it? The dollar yen. It's sort of hit these fresh highs recently, and they've got a bit stuck, and I think that's reflected across most of the currency spaces as well. We're trading in fairly familiar ranges, but most of the market is looking to buy dips in dollar yen at the moment, and I think even with the recent inflation data, we've got clues from the latest the change at the BOJ earlier in the week, and I think that points to topside dollar yen as well. So despite these numbers coming out sort of a little bit, I think they were on target today, but a little bit stronger before. I think we're still going to see dollar yen topside as a big potential, and I think we might be having a chart coming through there. This is the Aussie chart.
That's the Aussie. Let's see if we can get the yen up, but we'll get to the Aussie in just a moment. Because talking about what's going on there in Japan at the moment. I mean, because we've got the new head of the Bank of Japan, who was actually facing just a little bit of pressure, wasn't he, to actually shift on their policy?
He was, yeah, and I think that's going to be a bit of a current theme for him, and we've got that yen chart up now. And indications from him earlier this week that shot dollar yen a little bit further to the top side. As you can see, it's just banging up against that 200-day moving average. This is on the dailies, I think. There's a little bit of resistance around these levels, but if it can break cleanly through 138, I think we've got to move back up to sort of the low 140 levels, and even pushing back up to 145. A lot of this goes back to what we were going to start off with, which was the US data that we're seeing coming. That seems to be a common theme with everyone you're speaking to at the moment. I mean, we got another strong print yesterday. It wasn't tier one in itself, the weekly employment figures, but once again, those US numbers are just pushing to more topside, and dollar yen's probably something that's lagging. We're looking at euro and sterling and Aussie as well. There's maybe a bit of catch up on that US dollar play.
You mentioned the euro there. We also had inflation numbers out of the eurozone at the same time. How's the euro tracking at the moment?
Well, I mean, once again, we've seen for currency trades, it's actually been fairly boring, really. We were talking about US yields, we're talking about everything else, but we've actually been fairly range bound, and there is a feeling in the market that there's going to be a break one way or the other. And I think, given that recent US data, and even taking into account the recent European inflation data, I think there's probably a stronger reason for the dollar to go higher than the euro at the moment, but we're going to be watching data very, very closely.
Specifically then, that Eurozone CPI coming in at 8.5% for February. It was 8.6 the previous month. I guess that is justification then that the ECB is going to go with another 50?
They have to, I think, yeah.
Yeah.
And I think, we're looking at the Fed going with another 25, but the EU is probably on the catch up there as well. And with the currency game, obviously there's two sides in this interest rate differential game, but I think Europe in particular is one that maybe there's a bit of catch up in that currency move, but there's still very high inflation numbers, however we dress them up, and central banks have still got a little bit of catch up to do, and they're stuck between this rock and a hard place. And I know we keep talking about it every time we come on at the moment, that how much work have those rate rises already done? We're still waiting for them to come through in data, but the data is still printing fairly strongly, in my opinion. I think there's probably a little bit more work to do for all the central banks around the world. But if we're comparing data for data, I suppose the US stuff that keeps coming out stronger is probably putting that importance slightly above some of the other jurisdictions.
Yes, and yet again, overnight, in fact, we had the latest unemployment numbers from last week, where certainly claims there falling, which is, once again, good news is bad news.
It is, isn't it?
Yeah. You weigh that and you saw the US dollar did bump. I think the index lifted about 0.5%.
Yeah.
But then you also had measured comments from the non-voting member, Raphael Bostic, out of the Fed, saying, well, look, I still see the reason to be raising 25, not 50 at this point.
Yeah, and I think that's sort of going back to what we were just saying, is that and Bostic, even though he's not non-voting, he's listened to very, very closely over, and Fed watchers are always seeing what he's got to say. And I think that falls back on to see how much work these rate rises are doing. They know there's a lag. The Fed aren't stupid. They've been accused of being stupid recently, but they know there's a lag. So it is really very much data watching, but it's not coming through in the data at the moment. So there is that leaning in the market towards, there's a possibility of a 50. I don't think it would be it would be a surprise at the moment, but We'll look at non-farm payrolls numbers next week and a few other key pieces of data coming out. And if they're still strong, then there could be an even stronger case for a 50 basis point raise at the next meeting. I tend to think we're going to get 25, but if these numbers keep coming out like they are, then maybe the next meeting we have, there's a case for a 50.
Well, just looking at the latest commentary from Mohamed El-Arian overnight too, talking about, well, I mean, you mentioned perhaps some calling it stupidity as far as the Fed is concerned, but he's saying, look, the Fed has dug themselves a hole and there's no obvious way out.
Yeah, and it's now, and I think many central banks are in the same, they've been behind the curve, they're trying to get ahead of it, but by getting ahead of it, we're looking at recessionary pressures possibly coming. It's a difficult spot to be in, and then you're looking at different ways of stimulating economies or blocking inflation than the traditional rate rises that we're going through at the moment.
So, Nick, let's turn to the Aussie then, what's going on locally. Is this, though, still about the US dollar?
It is to a certain extent as well, and I think we had some good news out of China early in the week where data came out of China. I think it was the PMI we got that was stronger than expected, and that saw a little bit of a push to the top side. But that came on the back of weak data in Australia. So once again, when we go back to the charts, we've got to pull both sides, and the market's reflecting that, and it's trading in very tight ranges. So sort of 67, 68's done it for the last week or so. But looking back on the longer term chart, which we've got here, which is the daily, then I think we are pushing to the downside again. We sort of capped out above 70, and once again, it is that interest rate differential. I don't think we're going to see as aggressive rate hikes from the RBA, especially when we're seeing some of the data that comes out in the US. We have got that data differential between the Aussie and the US, and I think that points to downside.
Yeah, that reflects what we saw with that rally in risk assets more generally into the end of the year and certainly into January, and then of course come February it all unwound.
Yeah, and that's always supportive of the Aussie. The Aussie trades really well as a risk proxy, and Aussie yen traditionally does as well. But in particular, I think the Aussie took advantage of that. It moved higher. Now we're looking for reasons to buy the Aussie, but we're still very much range bound. And I think it comes back to, let's keep an eye on that Australian data that's coming out over the next few weeks as well. If we get that differential on data points, I think now that's going to give currency traders in particular the next range that we're going to see and the next step we make. I'm leaning to the downside, but we're still watching each data point as they come through.
Well, I guess the next key point will be the RBA meeting on Tuesday. Expectations, they're going to go 25 again.
I think we're going to get 25.
Would you expect that not a lot of movement then from the Aussie?
I think it'll be dead if they come out 25 and repeat what they've said before. And we normally see that from the RBA. They don't give us too much excitement generally. I think we're going to get 25 and a watch and wait. But I think the action's really coming stateside, and that's where we're going to see the currency start to move.
What about the impact of commodity prices at this point? How noticeable is that?
I think it's factoring in, and it always will do with the Aussie. We're always going to be looking at risk, and we're always going to be looking at commodity prices. It's holding the Aussie in there, but I think there's going to be bigger factors playing on the currency rather than just the commodities as well. We have to keep an eye on it. It's massive for the Aussie as a trading factor, but I think interest rate differentials are going to win out in the end over the next few months.